Magandang araw sa bawat isa sa inyo. Today I will discuss with you about the riskiness of stock markets. First, I will discuss some points from the book Financial Risk Management and Derivative Instruments by Michael Dempsey na na-publish noong 2021. Meron siyang mga tinalakay doon regarding the stock market. I don't know if the author is against or in favor of the stock market, or maybe he's just giving a reminder or warning to those who are in a hurry to invest but they don't know enough about the stock market. So tatalakayin ko yung mga sinabi niya doon sa book niya concerning stock market. The estimation of future cash flows is surrounded by a significant amount of uncertainty. As the economist John Maynard Keynes articulated in the 1930s. So maganda yung kanyang pinupunto dito, yung pag-estimate, yung pagtansya ng mga daloy ng pera, the cash flows. Sa hinaharap ay napapalibutan ng malaking kawalan ng katiyakan. He was talking about the book General Theory of Employment, Interest, and Money noong 1936. We are faced with a challenging task as we try to predict future cash flows, since there are certain aspects that are unknown to us. We are dealing with true uncertainty. At totoo nga yan, tayo ay nahaharap sa isang mapaghamon na gawain habang sinusubukan natin na hulaan ang daloy ng pera sa hinaharap, dahil may ilang mga aspeto na hindi natin alam. Kaya nakikitungo tayo dito sa tunay na kawalan ng katiyakan. Keynes went on to state that in a situation where the future is not just uncertain in a statistical sense, but completely unknowable, there are no solid beliefs to support any valuation, causing valuations to potentially change drastically due to sudden shifts in opinion. Ito yung sabi pa ni Keynes, isang sitwasyon kung saan ang hinaharap ay hindi lamang hindi tiyak sa isang statistical na kahulugan, ngunit ganap na hindi nalalaman. Walang matibay na paniniwala na sumusuporta sa anumang pagpapahalaga, na nagiging sanhi ng mga pagpapahalaga na potensyal na magbago ng husto dahil sa bigla ang pagbabago sa opinyon. Keynes believed that being a successful investor relied more on predicting the thoughts and actions of other investors rather than accurately evaluating the intrinsic value of companies. He emphasized the importance Keynes emphasized the importance of understanding the market psychology and trying to anticipate the behavior of the crowd. And according to Keynes, the shrewd investor should consider what the average investor is likely to anticipate. Tingnan nyo yung paniniwala ni Keynes na ang pagiging matagumpay na mamumuhunan ay higit na umaasa sa mga iniisip o sa paghula sa mga iniisip at aksyon ng ibang mga mamumuhunan sa halip na tumpak na suriin ang tunay na halaga ng mga kumpanya. Binigyan din niya ang kahalagahan ng pang-unawa sa sikolohiya ng merkado at pagsisikap na mahulaan ang pag-uugali ng karamihan. Ayon kay Keynes, dapat isaalang-alang ang matalinong mamumuhunan kung ano ang malamang na inaasahan ng karaniwang mamumuhunan. So ito ay mas naiintindihan ng mga active sa stock market. Talagang babasahin mo talaga yung mga kasama mong nag-i-invest din. Kasi yung mga actions nila, lalo na pag major actions of the majority, ay dapat mong i-consider yon bilang nag-invest sa stock market. Hindi ka pwedeng mag-stick lang doon sa nararamdaman mo o sa inaakala mo. Dapat mong i-consider yung decisions ng majority na nag-i-invest sa stock market. Justin Fox, 2009, discusses in his book The Myth of the Rational Market, a survey conducted with professional investors. Despite agreeing that the Standard and Poor's high price to earnings ratios in 1999 would decrease, these investors believed that placing bets against the drop could be detrimental to their careers as long as the markets were still expanding. This perspective aligns with Keynes' viewpoints, which are still relevant after 70 years. So, ang mga investor na ito naniniwala na ang paglalagay ng mga taya o pakikipagsapalaran laban sa pagbaba na ito ay maaring makasama sa kanilang mga karera laban sa pagbaba ng yung S&P's high price to earnings ratios. Bumababa yon. Pero kahit na alam nilang makakasira ito sa kanilang negosyo, tinutuloy pa rin. So, ang pananaw na ito ay umaayon sa mga pananaw ni Keynes. Sometimes, the market can continue to behave irrationally for longer than a rational institutional investor can maintain their job. So, ibig sabihin ay kahit gaano ka-unstable ang market, mayroon pa ring mga nakakapanatili sa pag-invest hanggang sa sila ay mag-prevail at sila yung mga nagtitestify ng pamamayagpag sa kanilang negosyo na nagdaan sa matinding pagsubok. Habang ang mga iba naman ay nag-try ng ibang industry. At ang iba naman ay tuluyan nang nawala sa larangan ng investment. So may mga talagang nakakatiis na kahit bumababa ng bumababa yung kanilang kita, tinuturing lang nila itong trials doon sa kanilang negosyo. Tinuloy-tuloy pa rin hanggang sa sila ay namayagpag. And this was illustrated when Jeffrey Venick, the head of the largest mutual fund in the U.S., Fidelitas Magellan Fund, made the decision to withdraw from the .com bubble stocks in late 1995. However, much to his dismay, this stock continued to soar in value, leading him to eventually step down. This incident prompted the notion that he made the right move but too early. It ultimately appeared wrong, highlighting the belief that there is no distinction between being early and being mistaken. Kailangan mo siya yung nagpasya na mag-withdraw mula sa .com bubble stocks nung late 1995. Labis ang kanyang pagkabali sa pera dahil nagpatuloy ang pagtaas ng price ng stock na iyon. So humantong sa kanya sa kalaunan ay bumaba sa pwesto. Insidenteng ito ay nag-joke sa paniwala na siya ay gumawa ng tama pero napaaga. Sa huli ay lumilitaw na mali tuloy yung kanyang ginawa. Nagpapakita ng paniniwala na walang pagkakaiba sa pagitan ng pagiging maaga at pagiging mali. Therefore, for institutional investors, the competition to achieve better than average performance is focused on the short-term time frame in which they are evaluated. The main risk for institutional portfolio managers is not the possibility of losing money that belong to others, but rather the risk of falling behind their peers in terms of performance. The fund manager finds comfort in the fact that if the market were to decline, other institutions in the same industry would also be impacted similarly. Everyone experiences the negative consequences together. To put it simply, when it comes to investing in stocks, participants in the market are not faced with an individual risk-reward dilemma, but rather participate in what can be described as a competitive tournament. This nature of stock investment was particularly evident during the internet boom in the early 2000s and the global financial crisis of 2007-2008. Citibank's CEO Chuck Prince famously justified the reckless behavior of financial institutions at that time by stating that as long as opportunities were present, one had to take part in them. So, kinukumbinsin niya na tuloy-tuloy pa rin dapat ang pag-participate. At ang sabi pa niya, as long as the music is playing, you've got to get up and dance. So yan pinupunto niya, habang nandyan pa yung kumpanya na lumalaban, sige lang, suportahan lang dapat. Dahil bigla rin niyang natataas at napatunayan niya ng maraming investors sa stock market at sa ano pang mga larangan ng investment, na yung mga napabayaan na, yung mga palugi na, ang daming mga nag-withdraw na ng kanilang investment, and then all of a sudden bigla siyang nag-boom. So nabiyayaan yung mga nag-stay na mag-invest kahit na hindi siya gaanong malakas na or kahit palugi na. So maraming nakaranas ng ganyan. Institutional investors often have a strong tendency to follow the crowd, resulting in bull and bear markets fueled by collective behavior. This means that instead of gradually incorporating new information into prices, institutional managers rely on each other for investment decisions, resulting in a self-reinforcing cycle. Hence, despite institutional investors having concerns about a possible disruption of separation in the market, their actions are actually planned to raise the chances of such an event occurring. This is because they anticipate that the stock market growth cycle, which they have supported for a long time, will eventually experience a necessary market correction. Okay, the stock market is an essential component of global finance, serving as a vital platform for investors to buy and sell shares of public companies. The significance and influence of these exchanges are evident through their market capitalization. The London Stock Exchange was the very first stock market established in 1773. The first stock exchange in the USA started in Philadelphia in 1790. However, currently, the leading stock markets are both located in the USA. Dalawang stock market na ito. And these are the New York Stock Exchange, the NYSE, and the National Association of Securities Dealers Automated Quotations, or the NASDAQ. The stock market serves as a platform for buying and selling stocks. And in the case of the Philippine stock market, it specifically enables individuals to invest in companies that are publicly listed in the Philippine Stock Exchange, or the PSE. When you purchase stocks of a corporation that is listed on the public market, you acquire a stake in the ownership of the company. This means that you essentially become a part owner of the company and have the opportunity to benefit from its growth and future profits. On the other hand, if the company experiences a loss or performs below market expectations, you may also experience a decrease in the value of your investment. There are two methods to generate growth in your money when investing in the stock market. The first is through capital appreciation, which entails an increase in the market value of your stocks. This is the difference between the price you paid for the shares and their current market value. However, if the company underperforms the stock price may drop below your initial purchase price. Second, companies can distribute earnings to shareholders in the form of dividends. And dividends are payments made by the company to its shareholders, and they represent a portion of the company's profits that are not being reinvested into the business. There are two main types of dividends that the companies may choose to give. One type is cash dividends, which are a specific amount of money paid for each share of stock owned by the shareholder. The other type is stock dividends, where shareholders are given additional shares of stock at no charge. This stock dividends can be sold by the shareholder at any time after they have been issued. Understanding the risks and knowing your limitations are essential when investing in stocks. It is equally important to acknowledge the possibility of both profits and losses. Stock prices are highly prone to fluctuations and are difficult to anticipate due to a variety of factors influenced by local and global markets and economies. Although it is impossible to completely eliminate risks, it is possible to mitigate them. It is crucial to understand the nature of your purchase and its fair value. Additionally, it is vital to evaluate if a public company can sustain profits and foster long-term growth before investing in its stock. It is wise to exercise caution when trading stocks influenced by rumors or speculations, as an rumor often leads to a decline in stock price. Do not take on more financial commitments that you can handle. It is important to carefully assess your investment goals, risk tolerance, and financial situation when managing your level of risk. Determine the amount of money you are willing to invest in stocks and the amount you can comfortably afford to lose, and then restrict your investment exposure accordingly. From the website of IFEC, mayroong pinublish dito yung sa Hong Kong, ito yung mga risks na pwede mong asahan or pwede mong gawan ng paraan in case na ito ay dumating sa kanilang stock market. Una, the market risk, then interest risk, global risk, business risk, corporate misgovernance risk, trading suspension risk, liquidity risk, currency risk, policy risk. So yan yung mga nakita nilang hinaharap o hinarap na ng mga investors ng stock market nila sa Hong Kong. When it comes to trading, risk management is the only aspect within your control. The future price movement of a stock is beyond your influence. But what you can influence is the level of your risk you are willing to undertake. And paalala lang sa mga nagkakaroon ng interest na mag-invest sa stock market, hindi yan masama. Ang kailangan lang ay mayroon kang sapat na kaalaman tungkol sa kalakaran ng stock market, lalo na sa ating Philippine Stock Exchange. Kabisaduhin mo muna dito bago ka magkaroon ng plano na mag-invest internationally. Yan, at mag-start ka muna sa maliit. At kahit maliit lang yung umpisa mo, kailangan may sapat ka pa rin na kaalaman tungkol sa stock market.